Cryptocurrencies are associated with a high degree of risk, therefore you need to stay vigilant and do thorough research while looking at that space. Over the last few years, cryptocurrencies and other unconventional investment forms have grown hugely. In fact, young investors entering the market have carved a niche in cryptocurrency investments and related assets. As newer forms of investment take center stage, self-managed super funds have become increasingly popular in Australia. A self-managed super fund allows the account owner to become a trustee in the fund and decide where the fund should be invested. However, becoming a trustee is a painstaking responsibility that requires a hefty amount of research and in-depth knowledge. It is worth noting that individuals may not get the option to invest in a high-return portfolio with privately managed super funds. However, as cryptocurrency investment remains a questionable area, with some nations even seeking a ban on it, self-managed super fund holders remain perplexed about investing in the crypto space. So are self-managed super funds subject to crypto scams? Well, at this point, it's a well-known fact that the cryptocurrency space is home to some dubious operations. The past few years have been marked with large-scale scams involving embezzlement and fraud, which have cost many investors dearly. A big risk arising out of self-managed super funds pouring into cryptocurrencies is the possibility of trustees falling for a fraudulent crypto scheme. While mainstream cryptocurrencies are less likely to fall into embezzlement-related fraud, there are still considered risky investments due to their volatile nature. Investing in the more popular cryptocurrencies can help steer clear of any suspicious crypto-related activities. Trustees must take full responsibility for the self-managed super funds and where the fund money is invested. If an unexpected loss is incurred on its investments, the trustees would not be eligible for reimbursement or any adjustments. So this means that if crypto-related investments are to be made, they should be included in the clauses of the fund's deed. A crucial investment rule is to never keep all eggs in one basket, which is code for diversification. Now, it might seem like a lucrative opportunity to invest all the fund money into cryptocurrencies. After all, the greater the investment, the greater the return. However, superannuation money could be equivalent to many individuals' entire life savings. Investing money saved over a lifetime can be costly for individuals. It's crucial to diversify one's investment into other available alternatives. As trustees are solely responsible for the fund's investments, it seems wise to not carelessly invest in any schemes that appear attractive on the surface. So in a nutshell, investing self-managed super funds money into cryptocurrencies requires thorough knowledge of the market and a large appetite for risk. Using super funds to invest in cryptocurrencies may not be ideal for those nearing retirement. However, this does not negate the fact that sound financial thinking might help trustees double or even triple their investments with cryptocurrencies. Now, you can leave a comment below and share this video with your friends. You can also subscribe to our YouTube channel and press the bell icon to get notifications for our latest videos. I'm Rachel for KalkineMedia.